Why are earnings more important than the Federal Reserve?
It's a good question. If you asked me a month ago, going into the FOMC blind, would that be a smaller or bigger event than earnings? I would have said bigger, but the market seems pretty content right now that given the data that's coming in, the Fed's going to cut twice into the end of the year, kind of takes that off the table a little bit in terms of a source of uncertainty. And to all of your point, valuation is very high. Mag 7's holding in. There's a relatively high bar going into these earnings, and I think the market is treating that as a big event. You also have to remember it's not just earnings, right? You have NVIDIA GTC, you have some tariff headlines coming up, you have the follow-through from the FOMC. So pretty much the back half of next week is just kind of a string of really important catalysts.
How high is the bar for earnings? If we sit here and we say, oh, Netflix beat by X and NVIDIA beat by Y and whatever, is it going to have to be better than that? Are these numbers priced to perfection?
I think you're getting pretty close to that, but I wouldn't say price to perfection. I think, the market is setting a high number. The CapEx numbers are quite high, obviously, as well. But I don't think it doesn't feel as aggressive as it has been at other times during the past couple of years, if I'm being honest with you.
Stuart, I saw your notes on regional bank credit, and help me understand, is the market sniffing something out? Because you said, these issues have been out there. At the same time, most of us here on this desk have wanted to point out as this being idiosyncratic. No one wants to really say there's a credit issue in the room.
Look, I think that's really the trick right now is they do all seem idiosyncratic, but they all happened within about a 10-day period. And the market is I think the market's getting a little uncomfortable with the kind of concentration of those. To your point, hedging in high yield credit has been one of the biggest hedging flows we've seen over the last 3 to 6 months. So macro folks have not been totally, sort of ignorant to this potential risk. And I think that's, decreased the impact. And then secondly, to your point, I think what happened over the weekend probably is people had time to go through these piece by piece. And I think the reaction you're seeing Monday suggests that the deeper dive work they did over the weekend suggests that it is probably idiosyncratic. But look, nobody wants to be here 6 months from now kind of saying, man, how the heck did we miss those headlines, a few months back?
I think it's idiosyncratic in terms of its impact on the market. I think it may be systemic, though, in the terms of everybody's probably doing it. So I know that's somewhat nuanced, but KRE is trading like there's a problem.
Yeah, I think to your point, is this just, evidence of broader, let's say, lighter underwriting standards and things of that nature? That's possible, but that's not really, to me, a credit event risk, right? That's something that's going to be a drag over an extended period of time, but you can't ignore it. I would say even folks that believe that, what they've said to us is I'd be much more concerned if this was consumer credit related as opposed to on the industrial side. So, yes, that is, if you're extrapolating this out, is this sort of a bigger issue kind of across the lending spectrum.
All right, let's talk about how to maybe make some money. Last question. You say you got to go high-quality stocks, but also AI power generation companies. I love talking about energy. I love talking about electricity. But even I have to say and look at some of these companies and say, where's the earnings growth to that magnitude going to be? There's no doubt they have a great story to tell, but the market's really loving these companies.
Yeah, we liked PowerJet at the beginning of the year. Obviously, got kicked in the face a little bit.
By the way.
Well, it was until the end of January when that DeepSeek headline came out. We kind of got hurt there. But look, we do believe that AI, yes, but also just bigger picture kind of grid issues in the U.S. Kind of make this a really attractive, attractive part of the market tone. Also, if you look at like a data center construction, the power part is a relatively small part of the total cost. And if you're a Meta, a Google, and you view this as existential, that you need the power to get the chips to build the moat, then you're willing to kind of overpay a little bit up front for that power. And we do see some legs here in that trade still.